All right, welcome everyone. One more week, one more market wrap. मेरे साथ हैं Mr. Pankaj Pandey, and this has been an interesting week as well with some volatile sessions. I think we were down 3 out of 5 days, and then I say Monday and Fridays was somewhat green. Beyond that, it's also interesting because our quarterly results have started coming up. So a lot to unravel in this episode. Let's start with broader outlook of Nifty. What's happening there?
So hi, good evening, Vishu. Like you said, it's been a volatile week for the markets overall. But luckily, we had seen some pullback in the market, and which is why we ended with a minor cut of about 0.4%. And overall, with the kind of correction what we have seen, the markets are in oversold condition. So which is where one suggestion would be that people should not really think that markets are going to go down and further short positions should not be created. But our sense is that market will consolidate in this range of say 25,200 to 24,700. I think that is where the bounce also came in today. And we've seen about 6-7% kind of a cut in the market from the top perspective. So this year we have seen cut of 5-6 odd percent, and from there the markets have bounced back. But since we are in the midst of a result season has started, so which is why you'll see more of a stock specific reaction coming out. But overall sense is that you have a lot more events lined up, especially US elections, and then you have result season which is already going on. And on top of it, you have Maharashtra elections also being there. Somewhere down the line, really do not expect a one-way move in the market. So it is more of a broader consolidation is what we would expect. And I think in this overall thing, good part is that the crude has sort of corrected by 5%. So that sort of puts off worries on the inflation front to some extent. But FI selling has been definitely quite intense this week.
Right, absolutely. Can we delve a little more into the details of how much FIs have been selling and what is the impact that they have caused?
So the worst of the FI selling, which we had witnessed in the month of March 2020. At that point of time, they sold about $8.4 billion, roughly about 60,000 odd crore kind of outflow what we had seen. And this time, if you look at overall in outflows have been to the tune of nearly similar $7.5 billion. Had it been a normal course when the retail or the institutional money would had not been coming, I wouldn't have been surprised with more than 10% kind of a cut. But we haven't seen that largely because mutual funds have deployed more than 50,000 odd crore, and we've seen retail investors deploying about 12,500 odd crores. So the numbers are largely matching, and which is why overall we are quite stable. And in fact, if you look at mid caps and small caps have done relatively better because that is where the FI exposure is relatively less. But yes, heavyweights have definitely been impacted because of the selling what we've seen. And big stock like Reliance has seen a cut of 10%. So I think most of the big ones have taken some knock.
Absolutely. Let's move on to the results that have started to pour in. I think let's start with the IT companies. They were in the news quite a bit, I think.
Yeah, absolutely. I think IT every quarter we wait for some revival. So in this particular quarter, in this particular week, we had results of a number of IT companies, the big ones like Infosys, HCL Tech, Wipro, and LTI Mindtree. Now, one thing is very clear that it has been a steady quarter for most of them, and the outlook for H2 is muted. So when you look at the performance, most of the IT companies came out with a decent set of numbers. But only thing is that one needs to understand that in the last 6 months, the IT index itself has delivered 25% kind of a return. Now, if those are already sort of baked in terms of prices, then the results have to be really good to sort of justify that. And I think which is where the challenge lies, because when you look at the overall growth rate, Infi delivered about 3.1% kind of a growth rate, HCL Tech 1.6%, LTI Mindtree at about 2.8 odd percent. And margin wise, marginal improvement is what we have seen in the margins for most of the companies. So, for example, Infosys margins were flattish. But HCL Tech margins expanded by about 149 bips, and for LTI Mindtree about 50 bips. But I think this margin is not going to sustain in the second half, because companies will have to undertake a wage hike, and that should lead to margin decline. Now, coming to deal wins, so deal wins have also been soft. So for Infosys, quarter on quarter, the deal wins are down about 40%. I think overall HCL Tech did okay with a deal win of about 13.2% higher compared to last quarter. Otherwise, even LTI Mindtree also had witnessed a deal win down by 7 odd percent. Again, common commentary against all the companies that H2 is likely to be weaker. While some of the companies have revised their guidance by a few basis points, but we have already seen decent growth this particular quarter. So it clearly implies that second half is not going to be really great for the companies. And there are some obvious reasons for it, because you'll have a higher number of furloughs. Then you have a lower number of billing days. So from that perspective, things are challenging. And I think companies are also waiting for their clients to come up with the revised budget. And I think that is going to happen only after the US concludes their presidential elections. Till that time, it's more of a wait and watch.
Right. And we will wait and watch. Moving on to the banking sector, I think Axis Bank came up with its results this week. What happened there?
The Axis Bank numbers were in line with the expectation. See, the broader expectation in the banking segment has been that since the deposit growth is muted, especially the CASA, and then RBI has been pressurizing banks to sort of lower the tempo in terms of growth rate in some of the unsecured segments, and which is why the overall growth rate was expected to be low. And then there was some expectation of margins being down in the range of, say, 2 to 10 basis points. Now, coming specific to Axis Bank numbers were quite okay, with NII growth of 9%, and margin saw a compression of 6 basis points quarter on quarter. And of this, I think 5 bips is attributed to the IT refund, which was recorded in last quarter. So if you sort of exclude that, we haven't seen much of a margin pressure for this thing. Asset quality has largely been stable. But profit growth has been higher largely because provisions have been lower, and then there has been treasury gains. So that has sort of helped deliver a better set of numbers. I think, again, in our case, we are still sort of in two camps in terms of what is the quantum of rate cut we are going to see. And that is where I think banking is also sort of hanging in between. But banking is the only sector where risk reward is okay. And I think Axis Bank did very well from a price performance perspective on Friday, largely because our sense is that probably the FI selling or overall selling, what we are seeing is being largely done, because banks typically take the maximum brunt. So I think the Axis Bank numbers were okay. Since valuations are also okay, so which is why I feel that we'll maintain a buy on the stock with a target price of 1400. But in general, banking numbers are on sort of expected lines.
Great. I think another head turner this week was Bajaj Auto, where the results were, I think, quarter on quarter quite steady, yet the stock tumbled quite a bit right after the results.
Absolutely. I think Bajaj price performance was a bit of a shocker. I mean, you hardly see any large caps correcting to that extent on a single day. Yes, you're largely right. Results were quite good. So they delivered about 22% kind of revenue growth, 16% by volume, and balance coming from pricing. So volumes were good. Margin was intact at 22.2%. Profit was also good at 21%. So that way, nothing to sort of complain from the result perspective. I think what really sort of psyched the market was one, I think the company said that the festive demand, they're going to see a slower growth of 3 to 5%. And earlier expectation was high single digit. So that sort of impacted. And in fact, management went to the extent of saying that for the rest of the year, the demand is going to be lower at 3 to 5% compared to, again, 5 to 8% kind of a number. And I think that impacted because, see, Bajaj Auto has done very well from a price performance perspective. The stock is doubled in the last 1 year. It's trading at 30 multiples, typically, which is 2 times their PEG ratio. Typically, this trades at 1.5 times. So valuations were also rich. And with this kind of a commentary, I think Bajaj Auto got a good amount of hammering, and our rating now on the stock is hold. And it had a fair share of impact on other auto companies and other consumer-facing companies. Let's see what is the commentary from rest of the other companies on the consumption side. But Bajaj commentary was definitely a damp.
Right, right. Continuing on the auto sector segment in general or ancillary sector, let's talk about the domestic tire space. What has been happening there?
Yes, some respite on the tire space because, see, in tire, the bigger question or bigger challenge was that the rubber prices had gone up from, I think less than 200 to nearly closer to 250. Good part is that the prices have come back and clearly getting reflected in the numbers for CEAT. So CEAT came out with decent set of numbers, while the top line growth was in single digits, but the gross margin deterioration was 190 bips. But since they have taken price hikes, so from that perspective, the overall EBITDA margin decline was restricted to 90 bips. And we hope that overall the numbers for other companies, because JK Tyre and Apollo Tyres, both of the companies, we have a buy rating. So our sense is that things are not really so bad for tire companies from a demand, plus also from the margin perspective. So worst is definitely behind us in terms of for the tire as a space.
Right. There was another news that wherein an Indian player, Sudarshan Chemicals, is acquiring world's second largest player in pigments. So what is our outlook on the deal, and how do we see this happening?
So, Vishu, not many great details have come out because company is going to announce the results also, and which is why we have not really revised our rating. Our previous target was 1030, and this was one of our conviction buys earlier. Now, you're right that this company is Sudarshan Chemical is acquiring this company, and they'll get about 17 manufacturing sites in 11 countries, of which 4 are in India. And I think what you're getting is a top line of about 8,000 odd crores, and you're going to pay about 1180 odd crores. And this deal does not include the UBAC debt. So it is more of a distress sale by the German parent, and because they filed for bankruptcy there. But I think overall sense is that for Sudarshan Chemical, the management's aspiration is to move in the specialty side of the pigments, and which is where Hubac acquisition is going to tilt the portfolio. So which is why we are looking very constructively this particular deal. And let's see what kind of details they come up, because the management details are still sort of quite less for us to sort of complete the whole story. And possibly, I think once the results are out, we'll have a lot more details, and that is when we can discuss in further more detail.
Absolutely. I think there's one more hot IPO on the street now, which is Waaree Engineering, that people are getting a lot of people are getting excited about. What is our outlook on it?
Yeah, definitely. The excitement is there because that is what the gray market premium also suggests. Now, this company is one of the largest solar PV module manufacturers with a capacity of about 13.3 gigawatts. So they've got about 12 gigawatt kind of a capacity in Gujarat and about 1.3 gigawatt in Noida. And they command a fairly large market share of 21% on the domestic side, and their contribution to export is about 40 odd percent. And when you look at their top line is about 11,300 odd crores, and 58% of that is going towards export. And they're raising about 4,300 odd crores. So OFS is, I think, only about 721 odd crores, and the rest is going to be a fresh issue. Now, with this money, what they're looking to do is that they are looking to put up a 6 gigawatt kind of an integrated facility. So right from ingot wafers, solar cells to solar modules. And this capacity will be commissioned in 2027. And I think overall sense is that post all of this expansion, their capacity would be about 21 gigawatts. and they have a fairly large order book of about 17 gigawatts. And mind you, while they are selling modules, their EBITDA margins are quite good at about 13, closer to about 14 odd percent. And I think in last 2 years, their top line has grown 4x, bottom line and EBITDA has improved significantly. Valuations are okay at about 35 times FY24 PAT. So from that perspective, I think the stock is quite well priced, and I'm not surprised with the kind of a gray market premium which is there on the stock, and which is why we have given a subscribe rating to this IPO.
Awesome. And finally, to our final section of the day, hidden gem of the week. Which will it be this time?
So while we've been discussing IT, most of the commentary in IT is not so good, but there is one company which came out with a good set of numbers in the IT as a domain. That's Newgen Software. Here our target price is 1465. Now, this is one company which has got an aspiration of having $500 million kind of a revenue in the next 4 years. And if you sort of extrapolate in terms of the kind of growth they require to deliver this, that's massive, about 36 odd percent. But having said that, we are looking at a balanced growth of about 24 odd percent in the next 3 years. Margin profile is expected to be about 24%, so pretty steady margin profile. And I think this is one company which derives 60% of the revenue coming from annuity-based revenues and 40% coming from software and implementation. And they've done phenomenally well in the last few years. This is one company which has been standing out within the IT as a overall pack. And outlook continues to remain good. The numbers were quite good, so which is why I feel that it's a steady compounder, and which is why I'm recommending this stock.
Awesome. Well, that was it for today. Thank you so much for giving us time, your time and experience. We'll be back next week. In the meantime, viewers, if you have any questions, please do put them now in the questions. We'll try to get back to you with them. Thank you so much for watching us.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.